stability and development of every nation. No nation can do without SME because they have a vital role to play in every business the company does carried out. What are the roles they do? They are contributing meaningfully to the nation's development. It's also recognized as a contributor of job creators as an SME, because when you have enough SME operating and there is a lot of empowerment to the SME within the nation, so it closes a gap of poverty alleviation. Likewise, it creates a job opportunity for the youth. Nigeria, which can never be left out, sometimes about 4 or 5 years ago, also made a provision for about $220 billion for SME development in order to promote and enhance the development of SME within Nigeria. But as it is now, what roles does accounting play in this aspect, in this regards? Firstly, for you to prepare any account for any financial regulations, such as a government or tax authority, there are basic things they ask you to do is to keep your book. And an average Nigerians, we believe that when we have our businesses running, we have an idea that we can always manage our business. And since I know what comes into my accounts for every business I do, and anytime I want to purchase, I can purchase from my account. It goes beyond that. Because when you make anything and you don't have any records, the records usually show how human beings, when time flies, we want to forget any transaction we carried out. But when you have a record, the record will speak, and then you can always make reference to it. So that's why the first thing we need to conceptualize. The first thing is the bookkeeping. What are the things we need to do? So the bookkeeping, what is the importance of bookkeeping does in our businesses? Firstly, it is used. What is bookkeeping? Bookkeeping is the act of recording in financial transactions, which is part of the business process and is accounting process also. So what are those things you record on a daily basis? If you are doing a business, you purchase items, all those things you need to record in your purchase book. Any sales you make on a daily basis, you record it in your sales book. Payments you make in terms of expenses like NEPA bill, fueling of your cars, and the likes, you need to record it in your daily expenses book. All these things now make an accounting to be easier, because if you are preparing accounting, an accountant will make reference to the book you kept, because a bookkeeping is prelude to an accounting. So why is bookkeeping important in our businesses? Firstly, it helps us to prepare a budget, because if you don't have any record, you cannot make reference. When you keep a record via your bookkeeping, you can easily identify what sales you make in January compared to sales you make in February. So from your sales registered. Likewise, you can also give a track of record of expenses you make in the month of January, February, March, to know where you have, when your expenses grow or is falling. So all those things are also part of the importance of bookkeeping. It also helps in analyzing your business performance. If your business is making profits in January, but in February you are making loss, you need to identify where do you get it wrong. So in terms of business performance,
You're supposed to listen to this one.
The short lessons.
It also helps you in planning. If you want to plan for future, first thing you need to identify what happened in the past. How do you get the record of what happened in the past? Is through the means of your record keeping, which is your book. You can easily review your book and have what is on ground at the present moment. It can enable you to forecast for future what might likely happen. So likewise, so it guarantees a peace of mind to the business owner. You as the owner of business, you have staffs working for you. If there's no record keeping, your mind might not be at rest, because you might be thinking something is happening when you are not there. But when you have a proper book and records, you can easily get a report from your staff. And then getting your report, your mind will be at rest. You know, you'll be on the same page with the business people. Also, you also track how do you monitor your growth in your businesses. So when you make a profit of 1 million naira in January, and you realize that in February your profit makes 2 million, in March it falls down to 500. So when your business is growing, you can easily get track of that through the importance of what? Bookkeeping. And also at the point, it gives you a snapshot of your business state. So from your book, at times, the owner of the book, when you engage an accountant, is either you have an internal accountant or an outsource. You can easily cannot have the record of what we did in the past few months or in the past few years. So when you have it at a glance, you'll be able to know the state of your business. So you don't need to deceive yourself. If you are doing well, you see it from the book. If you are not doing, if you are doing otherwise, you see it from the book. So those are the part of the importance we have from the bookkeeping. So before we go further, some people mix bookkeeping with accounting. They are different things. Bookkeeping is prelude to an So an accountant extracts records from the book to prepare a financial statement. In simplest form, you can say a bookkeeping is the responsibility for the preparation of financial or recording of financial transactions, whereas an accountant is responsible for interpretation, classifying, analyzing of financial and summarizing of financial data, which can be used to prepare financial information. So firstly, what do we now mean by accounting? We've identified what we mean by bookkeeping. What do we mean by accounting? Accounting is the systematic process of summarizing, because whatever you have in your book, like your sales book that record the daily sales, you have weekly sales, we have monthly sales, and you have a yearly sales. So accounting will summarize your sales on daily basis, on weekly basis, on monthly basis to have accumulated figure that makes up a year figure. It's process of summarizing, then you interpret which one is classified as revenue, which one is identified as expenses, which one is asset, which one is liability. So you'll be able to interpret those things, you measure them and you classify, you verify, then you prepare a financial data of it. So, and then for you to prepare an account for your businesses, there are some basic rules and principles that need to be followed. Why is this principle important? Because of uniformity sake. Because assuming for a regulatory body or government, like a tax authority, requests for 10 companies to file their returns. So those companies must comply with the basic standard and rules and guidelines for preparing those accounts. Reasons, because if you are preparing your account based on your own knowledge or your level of experience, and then Mr. B is also preparing his own account based on the level of experience, so it makes it difficult for them to analyze because they have different opinions and different mindsets in preparing their accounts. So to mention brief part of the principle that we need to comply with when we are preparing a financial report. The first thing is accrual principle. So the accrual principle, which is the first one, when you record any expense, what happens? So the expenses that occur in 2020 must go in line with 2020 records. The revenue that occur in 2020 must go in line with 2020 records. So that's the principle of accrual. Conservative principle, so which is the next one. This one is referring to, many of us, we have a plan which is very vital at the beginning of every year or end of the year that will start for the new year. So when you are drawing up a plan, you should be exercising care in acting on those plans, because a plan is an estimate. Let's say, for instance, now we draw up a plan in 2019, December, which was sealed and approved. Nobody's foreseeing what is happening now. And the present state we have now, if you have committed yourself based on the plan you have as of December 2019, that you are going to do this, you are going to do this, you promise A, you promise B. A plan or budget is just a mere estimate. You cannot act and make promises on your plan. So that's what the conservative principle is talking about. So when you are now making a plan, you have to make a conservative concept, which means you prepare for a worst in terms of your loss. What kind of outcome can you achieve that will minimize your loss and that will maximize your profit? So that's what the conservative principle is talking about. And also talking about the consistency principle. As a business person, we need to be consistent, even to your customers, your client. When they approach you, the way you deal with them last month, they can't come the following month and you treat them differently. So that means you are not consistent. The consistency needs to be followed, which is part of the key of the principle. The way you treat a transaction last year, there must be a reason for change. If not, you have to treat it the same way in this current year. So that's the principle of consistency. Economic entity principle. This is talking about you separating yourself from the business you do. Most of the SME nowadays, because of the nature of their business, or the scope of their business, they model two things together, their personal affairs with the business affairs, which is not supposed to be. It's not a good practice. Any inflows from the business, they prefer it to come to their personal account because they are the owner of the account. What entity concept is talking about is like you separate the business as a legal entity on its own from your personal life experience or expenditure. What affects your business should not affect you. What affects you should not affect your business. The business can sue and be sued on its own. So entity concept means that you should separate both, let them operate on separate basis. We shouldn't mix it together. If need be that you need to gamble into your business or take things out of your business, with the effect of proper bookkeeping, it will show that there's a certain amount of money drawn from the business. It can come in form of cash, or it can come in form of goods. Maybe your family members or friends pay a visit to your company, or you give a donation with the authority. You order your staff to give a donation. So there must be a record for it, which means it's either you keep a proper record of it, or you pay the money back to the business because it's a separate entity. It's not from your personal purse. If this is done, that means you maintain the entity principle. But if you are not doing that, it will be classified as drawing from your business, which at the end of the day, it will be eroding from your capital. So your capital to the business will be reducing. Other principle is full disclosure of principle. So when you're operating a business at a certain level, you must maintain a transparency in your businesses. You should be able to disclose what you do in your business, most especially your suppliers. Your level of honesty will also guarantee their level of trust they have in you, and they guarantee the level of relationship and reliance they have in you. So that's the principle of disclosure. And the going concern principle, which is the second to the last. Everybody that have mindset of starting up a business, you don't have mind of starting a business that will last for 6 months, or a business that will run for 4 or 5 months, or a year or 2 years. So the principle of going concern is talking about you establish a business that will run for eternity. Even though if you are no more, that is the concept of entity concept. If you are no longer in existence, somebody can pick up the business and run it effectively. So your continuity or supervision in business, also a key factor to that too. So the business operates on a going concern. That means it has a limitless life to operate. And lastly, to mention on this principle is matching concept. Matching concept is talking about any expenditure you incurred or revenue you generated. That revenue must be matched directly to the direct expenditure that derive that revenue. For instance, you make a sales of your product. It's either you make your product or you purchase and you resell. If you make a purchase, that your purchase cost must be recorded before you can arrive at your sales. So that sales that derive that purchase must be matched together at the end of the day to know what you have as your profits from that particular product. That's the matching concept. That's what it's talking about. And now, why accounting is very essential in SME. For us to explain this, we try to segregate or put it into 3 stages. As an SME, you have a startup stage when you are starting your business afresh, which is stage 1. And stage 2 is talking about you're already existing in business. You graduate from the startup page, but you are migrating to a regular business operation, which is your fully operational stage. And the final stage is the growth stage. You have been in business for long and you maintain a growth. How do you sustain the growth of your business? Those are the 3 stages. So what role do your accounting now play in all these 3 stages now? Firstly, now for the startup stage, when you start a business, there are many actions you need to take and system you need to set up to create foundation for a successful business. As an accountant, which can help you in this aspect, firstly, it will help you to determine the kind of business structure you operate. Are you operating a sole proprietorship, which is one-man business, or a bigger size, which is partnership, or a limited liability company? All this business structure has the advantage and disadvantage. So the kind of structure you are going with, the accountant will advise you better the advantage of doing this and the advantage of doing this. For a small structure as an SME, mostly the SME startup business go with sole proprietorship, maximally a partnership business where they have minimum of 2 or 3 people, limited like 20 people, except for professionals, which doesn't have a limit. They can come as many as possible. So accountants will guide you in this process. So it also assists you in financial analysis of your business plan. Firstly, before you start up a business, you must have a plan. Some people believe that we'll do a feasibility study. Good. When you do your feasibility study, how do you transform this into your business plan? It's also a key, because why most of the business fail in future, many people does not know the importance of business plan. We are thinking that maybe because the bank will request for business plan before we can access fund, or government will request for, like this, what is happening now, the CBN request for business plan, part of the requirement to access the COVID-19 fund. No, it goes beyond that. Apart from you are expecting a fund from government or any financial institution, it also helps you to strategize how you can move your business to the next level. Because the business plan will definitely tell you more about your business. Firstly, it will tell you what kind of products or what kind of service or goods you want to venture into. If you identify that, where is your market? Who are your competitors? And who are your customers? Having identified all this now, then you cannot strategize. When you know your customer, you know your requirement of your customer. What are the likely demands? For you to know once you know your demand from that your product, then you cannot guide you on your financial forecast. What are the likely states you realize on the first quarter, second quarter, third or fourth quarter of starting your business? So the business plan can help you to do that with the aid of your accountant. Also provide advice and assistance for opening your bank account. Like I said, also like the entity concept I mentioned, the principle. You have to open a separate bank account for your business as a startup. You don't say because I have about 3 or 4 bank accounts that I operate on a personal basis. That is your personal affair. You need to separate it from your business affair. So a separate bank account in the name of your new business must be available. So you also make procedure for the government regulations, also the compliance. What are those things the government require? Firstly, now some people, when you are starting up a business, there are some things you need to do with the government agency, like NAFDAC. So all those processes also, they can also assist you in that areas. And also, all your expenses, the track of your expenses on daily basis can also be tracked. How? Immediately you have the mindset of starting up a business. From that day, any expenses you incur, which is directly related to that particular business you are setting up, you must take cognizance of it and keep record of it. How? Because starting from your business registration, you pay some certain amount of money to your lawyers to register your company. There are some logistic funds you incurred, expenses. Some might even include PRs. All these expenses need to be articulated together at the start of a business. This is what we call a preliminary expenses. Because those expenses need to be identified. But since your business is starting up, you cannot match those expenses at the beginning of your business. If not, you will definitely run to loss at that period. But the law give allowance or provisions to that to spread it over a number of years. You amortize your preliminary expenses over your business for a number of years in order to avoid to weigh down your first year profit. Accountant can also guide you to do that. It's also explained, like I mentioned also, importance of keeping your personal expenses to that. That's the first stage. So moving to the second stage now, after you have set up your business, you migrate to your regular operational stage. Once your business off the ground, you will need to maintain accounting system. The accounting system is either manual or electronically. You can adopt any of the two, depends on your level of your financial state. Any of the two you adopt, so some single action for your accountant can take assist in going businesses. What are those areas which can be included? One, your financial statement. So it will help you and guide you in your understanding your in and out of what goes in and out of your businesses. Firstly, when you start up a business at the earlier stage, which is the stage one, because of the nature of the transactions and the flows, you might not have a lot of traffic in terms of your sales and expenditure. But when you move to the next stage, your daily sales at the startup stage might just be maybe like 200,000 naira. Maybe on a monthly basis, you record like 5 million, 7 million at the startup stage. But when you move to the next stage, you might be recording like 10 million monthly, 20, 50 million monthly. When you move to that stage now, your operation becomes complex. So everything that goes into the business or goes out of business, accountant will help you to take a track of it. So at a glance, you'll be able to know the state of your finances. It also oversees your payroll, because when your business moves to the next stage, you need more hands. Definitely, you maintain some number of employees that you pay salary to. So all those processes also, the accountant can also help you to guide in those areas. Also, it provides advice on the estimated tax payments during the year, because normally what FRS, government, is either IRS, that is Internal Revenue Service, or Federal Inland Revenue Service. If you operate like what I mentioned earlier at the startup, if you operate a sole proprietor, you file your returns with State Inland Revenue Service, not Federal Inland Revenue Service, in terms of your yearly returns. So you'll be assessed to tax on personal income tax basis, not company income tax. So in this case, when the accountant will not guide you the estimated tax payment you need to pay, that's a provisional tax payment. The tax authority also encourage people to file a self-assessment. How do you do that? By getting track of record of revenue you have for the duration of 1 year, and you match all your expenditure against whatever that is left. You can make a provision of your tax, because the law states the provision of the tax rate. At that point, you can make for it. So when it is due to pay, and you remit accordingly. Also, it can help you to check out your record and your financial report at the end of the year. So to know maybe you make profit or otherwise. So when you make loss, which area you get it wrong, so you can be able to identify that and correct it for future purpose. So you can also make a close monitoring of your accounts receivable to illustrate the trend behavior in your customer base How does this work? Your receivable has something to do with your sales. In simple layman terms, what do you mean by receivable? Your receivable means your short-term debtors. Every businesses that anticipate for growth, business growth, should have a mindset of creating a credit facility. You expect credit from your suppliers to give you a credit word like a month or 60 days. Likewise, also, you should be able to have mindset of giving credit to your customers to encourage your sales growth. But when you are now maintaining your credit policy, you should be able to match it with the nature of people you grant credit facility to. If you are giving a credit, if you are an organization that give more of credit facility, you are endangering your businesses. How? Because some people will buy things from you. When it's time to fulfill their obligations, you find it difficult. So in that case, you have the chances of getting a bad debt profile. When you have a bad debt profile, at the end of the year, your financial statement will be showing that you make profits, and then you'll be having a liquidity problem. Because most of those things that you're supposed to have converted to cash is hidden or is being held by your debtors. So accountants will help you in this stage for you to balance your receivable as against your sales you made. It also helps you to establish a detailed budget to identify the inefficiency within your operations. Suddenly change in vendor costs or sales revenue can alert you at any industrial change. Also, is understand the financial position in order to spot problem areas. Like I said also, at a glance, let's say for instance, you are into you make a stationaries. As we all know, when the school resume, secondary school or primary schools resume in September every year, the demand for stationery will definitely go. So with the purpose of this now, you can be able to get the period, your peak period, when this particular product will be required in large quantity. In that case, you prepare it before the time for you to meet up with this abnormal demand that can arise. So at this point now, you should be able to, from your financial position now, you should be able to identify which areas you need to adjust or which area you are not doing well that you can create. So likewise, furthermore, it also helps you to determine the area of growth, like I said also, by providing insight in cash flow pattern, inventory management, price. Like I mentioned, like in school, the high demand of stationery occur during the new session, which is September, October. You should be able to manage your inventory to make it available for a future demand that can arise. There is also a danger to that also if you don't balance it. If you have a large inventory, you are also exposed to certain risks. Firstly, the risk of theft. If you don't have adequate security, you are a danger to that. The issue of storage is also a challenge. You need to monitor that too. So all those things, when you have it in place and you buy those material you need in bulk, it will also have a positive effect in your pricing. When you are pricing your products, what you buy, the cost of processing it will definitely translate to your price. And then when you buy at higher cost, definitely your price will also go up because you want to cover your cost and make a profit. And when your prices are too high, there's a problem in the market. People will run away from a product because you have competitors which are selling at a cheaper price at the same quality of yours. So those are the areas you need to work on. The accountant will help. It also provides advice on property plan and equipment. At this stage, when your operation grows, at the growth stage now, so when you are trying to expand your business, Furthermore, compared to the present state, an accountant will advise you, your equipment you are using, is it best for you to acquire it outright purchase, or you choose other options like hire purchase or lease? So these options have their benefits and disadvantage, and also has a financial implication on what you do. So at the growth stage too, so the accountant will also advise you in that aspect. And it also ensure you for proper audit process. So definitely when your business grows and it expands, your operation becomes complex. You maintain several books. So the number of your customers, clientele increase. You have a lot of transactions to do during the period. By doing this now, at the end of the period, for you to comply with the government regulations for filing of returns, you must prepare an audit of what has transpired for the period. So accountants will prepare you for this. So it will also guide you through the audit process. All those requirements of the audit will be presented based on the proper accounting requirement on ground. Also, it helps you to create a financial forecast so that you can make a better decision. Normally, if you want to make a financial forecast, for instance, you can project. Firstly, you have a strategy plan on ground. What are those things? Because it's the accountant that will translate your strategy plan into Naira and Kobo. You might have a beautiful idea. If you cannot translate it to figure, you might be misguided. So whatever you have in plan, how do you translate to Naira in monetary terms? So accountants will help you in this aspect, because when the business grows, you might see the vision, what might likely happen in 2 years' time, in 3 years or 5 years' time. Because we have some smart people which have this idea and they have this gift. They can forecast what will happen in 5 years' time. But when you forecast what will happen in 5 years' time, somebody needs to put it on a Naira and Kobo basis as far as the scope of Nigeria is concerned, for us to know if this plan is achievable or not. At that stage, you can also do that. It's also work out a business budget that will support your business goals. Likewise, it provides advice or resources to assist with to scale up your business purpose. I haven't mentioned all this now. For instance, we are our scope of discussion here is basically on SME, covering across all sectors. You might be in entertainment, logistics, transportation, tourism. So whatever you do, this era we find ourselves now, the era of COVID, has an impact on our businesses. Firstly, now with the effort of federal government through the CBN, there's a provision, a palliative for all SMEs. For instance, like the health sector, we have a provision like 100 billions provided for the health sector. While other sector, we have 50 billion provided for them. But for you to assess all this now, which is as a way forward, like what we mentioned from the beginning, you need some records to show. Because CBN cannot interface with individuals, so they have to go through an agent, which can be other financial institution, either commercial bank or other financial institution like a microfinance or so. All those people will require some basic records from you. But if you have not been keeping this record we mentioned from the beginning, you might find it challenging to access this particular fund. So accountants also, they are also part of this SME because they are all legal, they are also like practitioners. Also, they also categorize as this SME. So the corona crisis, this COVID-19 is critical and it's affecting the SME. What the SME need to do to guide themselves to navigate through these storms. This will serve as a duty call to SME accountant and small accountancy practice to help struggling SME through this difficult period. What are the way forward? The following action may be recommended as a way forward. Many of these will also be relevant to small accountants which categorize all A's options available. If you are equipped with this information, you know how the A's, you are informed with the A's available, you should be able to advise. So an accountant should be aware of all financial aids and other forms of aids available from the federal or national government. It will be helpful for the national accountant body also as a whole to be aware of the aid that other countries provide, so they can also use it as a flagged practice to their policymaker in the nation they domicile. Number 2, application of available aid to your client's situation. This aid you are aware of, how do you now apply to your client to be a beneficiary to such aid? You can advise, one, you can advise on guiding through all the claims available to them. Firstly, you have your documents in places like what the federal government is doing through the central bank and their NISA microfinance. They ask for past 2 years records. If you don't have bookkeeping records and there's no simple accounting process in place, you might find it challenging to provide these records. The purpose of requesting for these records is to examine, to do some analytical review on your businesses for the past 2 years. So now assess the impact of this current situation, the COVID-19, on your business or your household. So that's the purpose. So you advise and guide them through the claims available to them, provided you follow the initial process mentioned earlier. Also identify options to diversify their business. When you identify that this COVID-19 eats their business and is creating a negative impact on their business, you should be able to advise them if there's a way to diversify from their current state, which will also help them to sustain their business and continue their business. Also, assessing emergency finance provided by government, like I mentioned, the one provided by for the health sector, likewise for others, the 100 billions and 50 billions. You should be able to help them to prepare their documents, all necessary requirements required by the government, and you assess these funds so for them to keep their business moving, so the business cannot die in this crisis period. And if possible, consider the renegotiation of your fee payment. You as an accountant that is rendering a service to your client, you also have a role to play. Assuming you charge your client 50,000 naira on a monthly basis, assumption. At this period, for you to help your client also, you can also come on board, call your client, the area you can assist them to renegotiate your fee is either from 50,000 to 20,000. Because it also have effect on your own business too, because you are also an SME, you may also be affected. Because immediately the business is discontinued, automatically it affects your own inflow also. What you earn also will also reduce from that business that discontinued. So number 3, to help with immediate business survival, an SME accountant needs to inform clients immediate measures to take on different survival to avoid collapse on their business. So all those means opportunities that are available for them to avoid the collapse of their business, you should be able to identify that and advise your client accordingly. Assess the relief on offer as soon as possible to maximize the impact. Like I said also, all those relief offers available from the government, you should be able to fast track it to assess it on time. So before the damage go beyond repair. Also review and adjust their cash flow forecast. Firstly, like I said, somebody make a plan, a cash flow plan in December 2019. And you must have projected your revenue on a monthly basis for the period of 2020. This era of COVID-19 call for you to readjust your plan to a realistic basis. So in this case, we have something called a variance analysis, which is planning variance. They call it in accounting. So you compare what is your old plan you have before the COVID and your new plan structure during and after the COVID. You should be able to put them side by side. So to know the area that is mostly affected. So with the aid of this, you can be able to navigate through this era of COVID-19. Also consider the business model to ascertain whether the SME can deliver goods or service to an alternative manner, such as by home delivery online or online, whether it can downsize or stop certain activities. When you try to redraft your business model, what you have not been doing before, likewise, the best center, is this, we'll be having this in plan to go online, online training, e-commerce, e-learning. But the advent of this COVID-19 fast-tracked it. So it creates and change our model of doing our business. So you should be able to do this for the business to survive. Because if you want to stick to the practice we've been doing before, which is the physical training, we hardly see 5 or 10 people to subscribe to our training program. But with the online platform that we adopt now, it can easily help. So we even have a larger people across the country from Sokoto, from Lagos, Port Harcourt can join, and we all be on the same page. Number 3, which is continuation, to help with the business, immediate business survival. We can understand the supply chain of your businesses. Firstly, what are your supply chain? You should be able to apply where all your distribution, like your supply, your goods or your supply of your material from your major supplier, you should be able to identify. Hope is not in direction of where COVID-19 affects a lot. When it affects their region, you should be able to diversify a means. So from that particular channel. So also to check their insurance. Firstly, now many of the businesses, most especially the SME, we need to be more sensitized about the insurance policy. People believe, how do I go for insurance? Why do I do insurance? Insurance policy is very critical to our businesses, most especially the area of financial losses, like this era of COVID-19. So when you know that, you review the policy of your client, the insurance policy of your client, and you realize that there's a consequential loss policy. Good. You can, with this policy, you can be able to reclaim some certain loss you encounter during this period. Like what the CBN also is requesting for 2 years data, financial records, both the sales, gross profits. With the consequential loss policies, is also stating the same principle. What happened in the past 24 months? What happened in the last 20 months? And also try to create a range. The COVID-19 and the lockdown of this pandemic issue started from the period of March. Federal government started lockdown from March. So from March date, almost 3 months now, assuming there's a total business come to normalcy in the month of June. So that means the period affected will be March, April, May, which is the 3 months. The policy will be identifying those 3 months affected, which is April, May, and June, March, April, and May, which is the 3 months, and translate it to the past 3 months in the year 2019, 3 months in the year 2018. What was the profit you realized in the last same period in 2018? What was the profit you realized in 2019? So it will also serve as a guide of the likely profit you're supposed to have achieved in these 3 months. By doing that now, so this consequential policy cannot help. So as an accountant, you can now guide your client for a claim of such particular financial loss from the policy. But without proper record, you might not be able to achieve this. So for business survival in this area, you need to assess what kind of policy your client operates. So if this is found in the policy, it's an advantage. So you'll be able to capitalize on that. Also communicate with their staff. Most of this particular period, many employees also know that there's challenges everywhere. because business is not as usual. So you talk to them, go into negotiation with them, discuss the issue of pay cut, which obviously they will definitely agree. So when you discuss with them, so the business will continue, because when you take option of laying your staff up, both the skill and unskilled, when the business comes to normal, you might find it challenging to regain your skilled workers, because for skilled worker, they have all it entails in the market. So those areas also need to be well managed. Ensure their financial are up to date. So by keeping their records up to date, so their financial will also be up to date. Renegotiate their payment terms also with their suppliers and the banks also. You can also help in these areas. Mostly supplier knows that issue of pandemic globally. So you can be able to talk to them, give more period for the repayment. Likewise, bank also, somebody that is a business that is running a loan that need to be doing a repayment, and then when the business is not doing as usual, definitely repayment will be affected. You can also take the responsibility and talk to them on their behalf. You talk to the supplier, likewise the financial banks also, to be able to give a time on their loan repayment and other commitments. Negotiate with their debtors also. Mostly now, when this issue of COVID also affected, as a business person, in one leg you have obligation to fulfill, and other leg also, some people are obligated to also pay their dues to you. In that case, you are the middle. So what is happening to you to talk to your suppliers or your bank? Definitely somebody will also on your customers' behalf talk to you also. In that case, you can also offer them by also another alternative means, by offering them a discount. That if you pay me within a certain range of time, you are entitled to 20% discount of your fund. So in that, it might encourage them to get your money back from them. So by doing that, your business keep moving. So also continually monitoring the situation. It can also help if all other things fails, all other option fails. So you consider the insolvency options rather than fully liquidation, because by declaring yourself insolvency, you can renegotiate and reorganize your business. Because if such is not done, the business can be fully liquidated. So the fourth option there is to help SME plan for their medium term. How do you do that? Many SME are likely to be in crisis mode at the state we have now. But the SME accountant should help them to avoid emergency measures that could endanger the business medium-term viability. How do we achieve this? Reconsider whether laying off your employee is if it's unavoidable, good and fine, so you take the options. And also to cut down the workforce of your employee is very key, because the staff salary overhead can also affect your total bill of your business. You should be able to keep them. You know the percentage of people you are retaining, and you know the percentage of people you are laying off. And as I mentioned earlier, many staff will prefer a pay cut rather than redundancy. Also, so this should also be a last resort options, only to make your clients aware and help them assess alternative options like financial fund that we mentioned earlier. Any option of finance that is available, you can quickly follow it up and assess it in order for survival of the business. And then also, you need to start building a financial reserve for business to survive, to prepare a new peak, because as soon as the lockdown or the COVID-19 era is end, so business will come back to normal. And then when it's come back to normal, where do you find yourself? You should be able to prepare ahead of this. Thank you for listening. Any
Okay.
question, please?
Okay, thank you, Dr. NURUDEEN. Thank you for doing justice to the slide despite the limited time. I think we have 1 or 2 questions here. Okay, the first question. Okay, can participants receive the slides recording of this webinar? Yes, you can. So let's see the question. The first question, as a small enterprise, can I undo my accounting records myself since I can't afford an accountant yet? Then the second question, as an SME in the light of the new Finance Act, please, do I still need to VAT for services since the invoice is less than 25 million? So those are the 2 questions we have. If you have anyone that still have question, you can quickly drop it there so that the facilitator can do justice to it. Okay, Doctor.
Okay, the first question.
Yes.
Can you handle your accounts yourself since you don't have resources to hire or to engage an accountant? If you have the knowledge, you can handle it yourself. So if you, like what we mentioned, if you can comply with all those basic bookkeeping, if you can keep all those records intact, so you can do it yourself. When we said an accountant, we have categories of accountants. Some people engage a graduate of accounting or other financial discipline like banking and finance to act as their accountant. Since they have that knowledge, they can do that. You also, if you are coming from a financial background also, you can do that yourself. All you need to do is to put those things you need in places, and then you'll be good and fine. So that is that, about that. You can do it. Number 2, as an SME, and in light to the new Finance Act, please, do I need to VAT? Do I need VAT? Or do I need to VAT for service? Yes. Value-added tax, withholding tax. The only thing that changed from the old Finance Act, the old bill and the new bill, is the rate. The rate increased from 5% to 7.5%. The way you do your business when it was 5% is still the same way you do it when it's now 7.5%. And VAT is a monthly record filing with tax authority, which is Federal Inland Revenue. Value-added tax is remitted to Federal Inland Revenue, while the withholding tax, if it's individuals, like I mentioned, sole proprietor or partnership business, aligned enterprise, you file withholding tax with State Internal Revenue Service. But with a corporate body like limited liability, you file it with Federal Inland Revenue Service. So you need to file your VAT and charge your VAT for every service you render at 7.5%. It's compulsory and it's mandatory for every business. Thank you. Other question here, somebody asked, what is cash book? A cash book is an obligatory book or a part of the necessary book to keep, which shows the inflows and outflows of cash-related items. With the word cash book, any transaction that does not involve cash will not come into cash book. If you make a payment involving cash, it goes into the cash book. But when your payment does not involve cash, on cash-related items. So that's the cash book. In addition, if you cannot afford an accountant, MS Excel has some excellent free templates that can aid you in bookkeeping or minor accounting. For example, okay, like I said earlier, for you to use MS Excel for your simple accounting template, you must have little or more knowledge of accounting background. Why? Because when you keep your record, like I said, in bookkeeping, you kept your sales book, your purchases book, your expenses book. For every transaction, a double entry principle, which is the golden rule of accounting, must be applied. For every transaction you do, there must be two things involved. What are the two things? The giver and the receiver. When you make payments, your cash or your bank will be affected, and the item you paid will also be affected. Assuming you purchase a new car, once you get the possession of your car, what will go in exchange is the cash you pay to the seller of the car. So if you have that knowledge, so the MS Excel can also help. You apply it, it makes it simple also. But when you do that, the Excel, you must keep a proper book. Like I mentioned earlier, it's either you do it manually or electronically. So that will also help you. Any other question? Okay.
That's the last question.
Okay, somebody now said, but the problem is that most clients doesn't want to pay tax, VAT. In this case, what do we do? Firstly, you need to sensitize them and you let them know the implication of not doing that. Because if you don't file your tax, for instance, there's a penalty for that. For instance, now, like there's the recent issue now, lingering now with the tax authority, which part of what I experienced during the start of the lockdown from March. It's obvious many businesses closed. Nobody goes to office. So how do you file your returns? And then most of the returns now are doing online. And then if you don't have access to your records, how do you file your returns online? So now when the partially lockdown is eased, people try to file their returns, their monthly return, which is withholding tax and value-added tax. And on the online platform, when you're trying to proceed to file your new, since you didn't carry out any transaction for that month, you file your new return. No inflow, no outflow. But at the point of submission, it's showing that you have to pay a penalty for late return filing, LRP of 50,000. So without that, you cannot proceed to the next month. So these are the issues now that we are battling with the Federal Inland Revenue Service. We have to put a call across to them that more of these cases will happen, and you should be expecting such, because many people didn't open their business. They are at their home. So how do you manage this situation? So it's part of the current issue they are trying to sort out now. Because many people will find it challenging. You that you didn't do business, somebody has to pay 50,000 naira as a penalty for not filing of returns. So in that case, when your client doesn't want to pay, you let them know. And the value-added tax also, most of the is inbuilt into the price. Like as a normal layman people, when you go to filling station and you buy fuel of 125 naira, and they give you an invoice, a receipt. An average in Nigeria, immediately they see the breakdown of that 125 naira, that the amount is 120, the value added tax is 5 naira. People will react. But the importance of this value added tax is that you input it in your quotation, in your invoice. If you like, you can state it clearly. If you like, you can embed it in the figure. But you should let your client know the implication of not doing that. You can do that. You factor it within your own book, but to them, it has a negative impact on them. So you let them aware of that. Another question? Okay, thanks. Must the cash book be a hard copy? No. Like I said, it can be soft copy. It can be hard copy. If you have, like what somebody said, if you don't have money to engage an accountant and you have an MX Word, we have a lot of accounting software that can help you in doing this. So we have like a QuickBook, Peachtree, Sage, and others that can help you to do that. It's not a must you keep a hard copy cash book. You can keep an electronic one or a hard copy. So that's of that. What next? So are you saying that we should add it to the rate, yes, that's the best practice. Because the issue of value-added tax, what it means, whatever you charge as your VAT, why people feel reluctant in paying value-added tax? Because they believe an average Nigerian charging them value-added tax will not remit such tax to the government. And then those are the part of the issue the government also is facing to individual or business or companies. When they charge value-added tax on their customers, they find it difficult to remit to the government. How does it work? If you know your product is 500 naira, you ascertain your price, that is 500 naira. Then you need to add government money to it, which is 7.5%. The 7.5% you had to that your 500 naira is not your money, it's government money. Immediately your customers pay. At the end of the period, you should be able to remit that 75 to government. And then we have input VAT and output VAT. So when you purchase items, you also suffer value-added tax from the what you paid. And then when you sell your product also, your customer also suffer value-added tax from what you sold to them. At the end of the period, you should be able to match your input and output together. It's the net balance that you pay to government. Assuming the tax you charge, the value-added tax you charge for the whole month from your customers, assuming it's 500,000. And at the end of the period, from what you purchase also, the other service you also paid for, you also suffer a tax of value-added tax of 450,000 naira. What you need to do at the end of the period is to bring 500,000 and match it against 450,000. What you have to pay to government is 50,000 naira, not 500,000 naira you deduct. Because as you are collecting VAT on behalf of government, some people are also collecting VAT from you on behalf of government. At the end of the period, you should be able to match both input and output VAT together. At the end, the balance is what you are going to pay to government. And at times, what you have to pay to government, what you also suffer as value-added tax might even be more than what you collected on behalf of government. At the end, you also have a credit to collect from the government. So it's not every time you file your returns and you pay government. When you file returns, you might be claiming some credit from government. Though government will not give you your credit, they will keep it aside for you for any subsequent filing that you have. It should not be used as a relief. Assuming you have a 50,000 naira credit with federal and revenue, and the new month now you need to file a return of 270,000 naira. What you need to pay them is to relieve that 50,000 naira from the 270. What you have to pay them now is 220,000 naira. So that's how it goes. Another question? Okay, sometimes that will make us not competitive. Okay, most of what I said. Firstly, you need to explain to your client. At times, little contribution, little profits you make from your client is better than losing your client. Some clients will tell you they will try to streamline the budget that they cannot pay beyond X amount of money. Why? Because they've seen the presence of tax in your invoice. What you now need to do is to adjust your invoice. If you adjust your invoice without them paying VAT or tax, and then you now factor in from your own hand to remit, whatever the differences you have, will it still be at a positive position to you? If the answer is you can, for the meantime, you can manage your client, and the continuous sensitization will be given to them to let them know the implication of not doing that. Because the implication is this: immediately they find it challenging, they see the challenge, the forces from the tax authority. Once they experience it once, they will not yield to their own advice of advising them to be tax compliance. So you factor it in. Instead of losing them, you can factor the value-added tax to your own invoice to remit from your own hand. So far, you still have something to do, something to have at the end of the day. So that can solve it too, to manage it in order to lose your client to other competitors. Okay, any advice on annual auditing for a new company? Yes, good. The advice, for instance, it depends. For instance, it depends on the size of your service provider. As an accountant or as a business person that need the service of an accountant, no accountant will charge you beyond what you do. Firstly, the scope of your business. That is why when you, before they give you a bill or an invoice, they need to examine your record to see the volume. You have to know the volume of work involved before you can prepare a bill for such. It's advisable to prepare an audit. Even Nigeria's system also, like the tax authority, as a new company, they give them a 3 years room to operate before they allow them to file a return as a tax. That is company income tax, if possible. But your monthly tax, like value-added tax or withholding tax, you are not exempted from that. You'll be paying that. Because they believe most of the challenges we have, the startup of the startup business, new business startup. You see some business that will operate for 6 months and fold up. 1 year, fold up. But the government now gives 3 years rules for a business to operate. If you can survive for the period of 36 months, which is 3 years, then you cannot prepare your tax and file your returns for the 3 years. So it's advisable for a new company also to prepare an audit, no matter how small it is. Even some, like I said, it depends on the size of your business. You see some accounting firm, a starter also that is coming up, they can charge as low as amount that you can afford. But when your business grows and it's become a larger multinational company, definitely you expect to have a larger volume of work involved. Definitely it also tells on the amount for your exercise.
Okay, thank you very much, Doctor, for doing justice to all the questions. Thank you for sharing your wealth of experience in the accounts and finance section with us. We also want to thank all participants. Thank you for your time. And I hope you have gained a lot from this session. And we are also inviting you to participate, to join the upcoming session on Tuesday, which is a continuation of our entrepreneurship development training series. So this time around, we are talking about the role of an entrepreneur in nation building, targeting Nigeria. What are the roles of an entrepreneur in building our country, Nigeria, especially after this COVID-19 pandemic? So we want to appreciate you all for joining us, and we hope to see you again next week, Tuesday, and subsequently. These webinar sessions come twice a week, mostly Tuesdays and Friday. So for next week, Tuesday is the one on entrepreneurs' role in nation building. Then we'll also enjoy you to follow us on all our social media channels at ACCI Best Center. You can also visit our website, accibestcenter.com. That way you can get more information concerning us. And when you follow us on our social media channels, you can always be up to date on all our activities. So I want to say a very big thank you to everyone for participating. And as usual, let's keep staying safe. If it is not essential, don't go out. If you have to go out, maintain physical distancing, wear your face masks, wash your hands frequently and avoid touching your face. We hope we'll all keep staying safe. Thank you very much for joining us, and we hope to see you again in our next session. Thank you.